Have you ever wondered how you compare to other property investors? Well, today you're going to find out because we're going to discuss the results of the 2018 Property Investment Sentiment Survey, and you're going to find out how 1,800 other Australians feel about residential real estate, how many properties they own, what they earn. Let's see where you fit in. And by the way, it's not a competition, but it's interesting to know, isn't it? So welcome to this week's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator, who has once again been voted our leading expert in wealth creation. That's the 5th time he's won a similar award in the last 7 years.
Recently, over 1,800 Australians took part in my annual Property Investment Sentiment Survey, and I run that together with Your Investment Property magazine and this year on thehouse.com.au. Now, being Australia's longest running and largest survey of Australian property investor sentiment, it showcases the insights from property investors and from would-be property investors all around the country. Now, I first started conducting this survey in 2011, and each year it's given us vibrant insights, how property consumer trends are occurring and how sentiment has changed over time. And one of the surprises this year was that despite our property markets moving to the slowdown phase of the cycle, more than half the respondents believe it's a good time to invest in property. And that's despite the fact that the vast majority of respondents, 84%, believe property prices are going to either remain flat or, in fact, the majority of them believe property values are going to fall a bit this year. However, clearly, the respondents to our survey took a long-term view. So today I'm going to have a chat with Sarah Megidson, editor of Your Investment Property magazine, to get some of her insights into what the survey showed. And then we're going to dig into each of the questions. We're going to unpack each of the sets of answers when I have a chat with Ahmed Imam so that we can work out what others are thinking, what they're planning to do. So as I said in the introduction, you can see how you compare to others. And again, it's not a competition, but it's interesting to know what people are thinking, what they're planning to do, because that's going to, set the scene for the markets for next year. However, I've recognised that the respondents to our survey were realistic. They thought they weren't going to enjoy quick and massive capital growth in the near future, but they still intended to buy more properties next year. Our survey revealed that 42% of respondents plan to buy an investment property, and this was down a little bit from last year where just over half were able to. And as we unpack the results of the survey, you're going to find it interesting where many of these investors are planning to buy over the next year. And you're also going to be interested to see the other trends occurring. So let's first start off by having a chat with Sarah Megidson, editor of Your Investment Property magazine. So Sarah, having looked at the results and chosen the winner of the various prizes, what insights did you get and what surprises did you get looking at the 2018 survey?
Well, I would say one of the first things that jumped out, which I thought was very encouraging, was that only 4.3% said they don't have a preferred investment strategy. And the flip side to that coin is 95% people do have some clear direction. So I think that's really important kind of now more than ever. Now that, in the last few years you could buy in Sydney or Melbourne and you were guaranteed to get a pretty good result. Now you have to be much more strategic and much more careful about what you're doing. So I think that's a really good thing and very encouraging to see that people are, having that very clear direction about where they're going to go.
I think that's a factor of the audience also, because readers of Your Investment Property magazine, readers of My Property Update blog have chosen to do that. So we've got a sophisticated audience compared to if we went to the average investor and said, what are your plans?
Yes, that is exactly right. And I think that factors into the next kind of point that really jumped out at me too was this question. This is actually the first one I raced through the results to find out the answer to this question. Do you believe now is a good time to invest in residential property? That's a question at the magazine we get a lot, from readers who are emailing us asking, should I buy now or should I wait? Should I wait till the market improves? People want encouragement about what to do next. And 52.5% of people who responded to this survey said that, yes, now is a good time to invest. And again, I think you're right. That's a reflection of the sophistication of the people that responded, because the reality is that any time can be a good time to invest in property. It depends on you and your personal strategy, your timeline, how much time you've got left in the market. And there are so many ways to make money out of property. It's not always just about waiting for a particular market to boom. And we've talked about it many times before, but there's micro markets within each market. There might be a part of a market that is booming and another part that's falling over, as you see with apartments versus houses in some cities. So there's just so many different ways to invest and to make a profit in property. And more than 50% of people are saying, yes, now is a good time to invest. Another 25% of people said they're not sure. And I think that is really important to take note of as well, because it just goes to show that we're all still needing to educate ourselves, I guess, needing to make sure that we're getting advice and getting really personalised advice for our own situation to make sure we're making the right decisions and not kind of just flying blind.
Well, I guess part of the reason they're unsure is because of the many mixed messages they're getting in the media.
Yes.
And I know you're an important part of the media, but you're an experienced journalist and you're a property investor. I know your background. It's interesting because your Investment Property magazine is a specialised journal for investors, but the average property writer for the big media, they're young people who probably have no background in real estate and wonder about these ugly, greedy investors who have got properties, and they're almost asking for the property market to crash.
Yes, I think there are definitely, we do get that sentiment too. On our forum quite a bit, we get people saying greedy landlords and greedy investors are ruining it for everyone and we need the market to crash so first home buyers can get back in there. And, the reality is that most investors are not these fat cats sitting at the top on their executive salaries. Majority of investors are just people who are trying to get ahead and build some wealth. And to them, property market crashing 20% is a really big deal. It's going to wipe out their wealth. So I don't think that's something any of us want to see happen.
Well, the other thing, of course, here is when these people who are looking forward to a crash buy into the market, they're not going to want it to go down anymore. They're going to want it to suddenly go up again.
Exactly. It's a bit short-sighted, isn't it?
And one last insight from the survey?
Do you know, one thing that I did find interesting was the question asked, what type of property are you planning to buy? And only 8% said they're planning to buy a new property. And I found that, with all the talk at the moment of Labor and their potential change to negative gearing to restrict it to new properties, and the changes we had a couple of years back with the changes to depreciation on new properties, it's interesting that hasn't affected investors' appetite. They're still not, chasing new properties in droves to get those tax depreciation benefits, which again, I think is a really good thing. It shows that people are looking at a bigger, broader strategy than just how can I save a bit more tax.
Well, I know over the next little while you're going to be having some commentary in your online newsletter about this. And so anyone who's responded to the survey is going to be getting your regular newsletter like the My Property Update. So I look forward to getting some more commentary from you about this. Thank you very much, Sarah Megginson, editor of your Investment Property magazine.
Thanks so much, Michael.
So now that we've had that overview from Sarah Megginson, I want to go through each of the questions of the survey, discuss the results, and I guess some of my interpretations of them. So to join me to do this, we've got Ahmed Imam, Director of Metropole Property Strategists in Sydney. Welcome, Ahmed.
It's been an interesting year, Michael, and a year full of changes, so I'm really looking forward to this.
Right. Well, I think some of the things that we found that surprised us this year were where people are planning to invest, how finance is or isn't affecting them, and what they're planning to do with their money. So let's walk through the questions and let's see what we can interpret from them, Ahmed.
Perfect. So these are, of course, the questions that were asked. How many investment properties do you currently have in your portfolio?
Well, the answer surprised me in some ways because it showed we were surveying a quite sophisticated audience. 88% of respondents already owned an investment property. 45% owned 3 or more properties. And interestingly, around 5% suggested they owned more than 10 properties. Now, we know if you took a survey of average Australians, the majority wouldn't own an investment property. And if you took a survey of the average property investor, 90% wouldn't own more than 2 properties. However, this is a survey of readers of my Property Update, listeners to my podcast, such as yourselves, and also readers of your investment property magazine. And On the House sent this out to some of their readers as well. So the answer is we were dealing with people who are a bit more investment savvy. And this is useful because it's going to tell us what's going to happen in 2019, Ahmed.
Sure. Next question is, where are your investment properties located?
Well, not surprisingly, the majority were in our 3 big capital cities, but 32%, about a third of them, were regional. So there was only a really small percentage in Hobart, in Darwin, and Adelaide. So when you took into account Brisbane, Melbourne, Sydney, and regional, that made up almost everybody. Interesting.
Okay. Next question. Are you a rent investor? Do you rent but own an investment property?
Well, clearly this is a trend that's changed over the last couple of years where more people living where they want to but can't afford to own a property, so they're renting and investing in a place where they can. So about 20% of the respondents were rent investors, but the answer to the next question was even more telling. Almost half said they would consider rent vesting as a way of getting into the property market. So the old story of having the great Australian dream of owning your home and then slowly paying it off, that's changing. I think we're living differently today than our parents did, Ahmed.
We are. I think the old saying that rent money is dead money only relates if you're not investing. So
that's right.
I'm actually glad to see that response. It shows that as investors, we are evolving. The next question, what is your preferred investment strategy?
Well, clearly the market has slowed down a bit, and this year 14% of respondents said they're investing for cash flow, and this is up significantly from 11% last year. In other words, more people are investing for cash flow than as opposed to capital growth than last year. But despite that, the vast majority of investors were investing for long-term capital growth, and a small percentage were looking at buying properties and flipping them, and that's probably, in my mind, not a particularly good investment strategy. Interestingly, though, 4.3% of people didn't have an investment strategy at all. Now, that's a real pity, because if you don't know where you're heading, how do you know if you're heading in the right direction? How will you know, more importantly, if you're heading in the wrong direction, you're not going to get there? So, again, we're dealing with a reasonably sophisticated group of investors. The vast majority did have a plan, did have a strategy, but disappointingly, a small group didn't.
Yep. Next question. Is your property investment portfolio negatively geared, or does it generate positive cash flow?
Well, despite the fact that the vast majority of investors were investing for capital growth, as I said a moment ago, only about 39% of investors held negatively geared properties. And in my mind, this suggested that over time, despite them having high growth properties, which we know start off being negative cash flow, that over time the rents increase and those negatively geared properties eventually become neutrally geared and then eventually provide positive cash flow. Now, this is a message we've got to give to Bill Shorten, our I call him the Prime Minister, Ahmed, and he's not yet, even though maybe he'd like to be. But the potential future Prime Minister, the concept is that negative gearing is a short-term finance strategy, not an investment long-term strategy, and don't screw up the system by stopping investors providing accommodation for people who choose to or can't afford to do it themselves. Negative gearing is one of the benefits of taking the risk, the entrepreneurial risk of being a property investor.
Now, this survey, of course, is about market sentiment. So the next question is actually very telling, in my opinion. And the next question is, do you believe now is a good time to invest in residential property?
Well, more than half the respondents believe now is a good time to invest. And this was quite surprising because despite the fact that they said it's a good time, the vast majority, in fact, 84%, believed property values were going to fall or at best stay steady. So clearly, in my mind, the message I'm reading from this is that these investors, the people who respond to this survey, are taking a long-term view. However, the percentage that said it's a good time to invest, in other words, just over half, is down from last year, where 61% of respondents thought it was a good time to invest. And that's not surprising, considering that 12 months ago there was a lot more positive messages in the media, but for the last year we've been hit by a continual conveyor belt of complaints and concerns.
We have, and I'm still pleased to see it at the level that we're at, considering the last 12 months that we've had. The next question follows on from that, Michael. Are you planning to buy an investment property in the next 12 months?
Well, 42% of respondents said they were planning to buy property again next year, and that showed the strong confidence they've got in property as a long-term investor. Now, not surprisingly, this was down from the last 2 years. So interestingly, over the last couple of years, the percentage of people who are planning to buy investment property in the next year was just over half, 52%. This time it dropped to about 42%. I guess a portion of them are just a bit uncertain of what's going on.
Next question. What type of property would you buy?
Well, apartments are out of favour at present because only 6% said they'd be buying an apartment. And that's not really surprising, as there's that significant oversupply of apartments around Australia, and that's been holding back capital growth from apartments. 10% are a bit unsure, but the majority of people were interested in buying a house or an older property with potential to add value. And just over 10% were looking at buying a townhouse and villa unit. And I'd be suggesting to people to consider that because of the land component of townhouses and villa units, you can actually get the same capital growth in a given location that houses do, but you can usually get into a better location because you're not buying as big a plot of land. I'd rather buy in the better location and a smaller component of land than further out in a house with a big block of land that isn't going to do as well, as we keep saying it's the location that does the heavy lifting.
Yep. Next question's a very simple one. Would you buy?
Well, we gave them a couple of options. Would you buy a new property, an off-the-plan property, one with ability to add value, an established property? Disappointingly, 3.5% of people would still be keen to buy an off-the-plan property. I guess if you ask the general population, or of potential investors, probably a larger percentage would say off the plan. So maybe it is again showing the sophisticated nature of the respondents in this. But off the plan is not a good investment strategy. It's been shown over and over again that the vast majority of properties on completion don't value up to anywhere near the contract price. But similarly, less than 10% would buy a new property. So the majority would be buying an older property with the ability to add value, manufacture capital growth, great strategy, or just an established property and let the capital growth work for them.
Now, you and I are big advocates of capital growth, of course. So I was actually looking at the response to this question in anticipation. Where would you buy for the best capital growth over the next 5 years?
Well, I'm not surprised with the result. Now, this was a multiple choice question, so the total numbers added up to more than 100%. So people ticked the box of where they thought there'd be good capital growth over the next 5 years. And around 70% of respondents suggested Southeast Queensland. So they ticked Gold Coast, they ticked Brisbane, and to a degree the Sunshine Coast as well. So not surprising with Brisbane now taking its turn in the sun, with infrastructure spending, with migration coming from interstate, and with the markets flattening in Melbourne and Sydney. So a lot of people were pointing up north. But still, 36% of respondents thought Melbourne would do really well over the next 5 years, and over a quarter thought Sydney would. Not surprisingly, about a quarter of people suggested regional Australia. And regional Australia's done reasonably well in the short term, but I think with our economy changing and more jobs being created, more income being produced in jobs in capital cities, the capital cities is the way to go rather than regional Australia.
Now, that question related to location specifically, we know that 80% of a property's performance depends on its location, but 20% will depend on the property itself. And the next question relates to property type. What type of property do you think will make the best investment over the next 5 years?
Well, again, having significantly experienced investors answering this survey, less than 1% believed in off-the-plan property. So that's really good to hear. The majority of people thought a detached house on a suburban block of land in the inner and middle ring suburbs, again showing that those sort of properties that have always performed well in the long term are likely to continue in the short term as well. And over a quarter of people thought that same sort of property, but one to which you could add some value through renovations or development, would be a good property as well. So many fewer actually suggested that they thought a regional property would do well. So less than 10% thought a regional property would be the best investment. Having said that, in the question just before, 25% of them thought they're going to buy in regional Australia. That doesn't make sense.
No, it really doesn't.
I guess they're buying because that's where they can afford, but I'd answer them by saying sometimes the right thing to do is nothing. If you can't afford a good location, don't buy a secondary property, because a cheap property today is going to be cheap property in 5 years' time. A secondary property today is going to be a secondary property in 5 years' time. So the gap between the better performing properties and the secondary ones is only going to widen.
I couldn't agree more. And affordability is not an investment strategy. It's not a reason to invest. So they do have to stick to the fundamentals, of course, as you touched on. The next question, Michael, is a question that every long-term investor needs to know the answer of. And that is, what is your property investment end game?
Well, the vast majority of the respondents realised that they're going to have to build a substantial asset base of properties and then live off the rent. So they were talking about owning a large asset base and then either living off the rent or living off the equity. But just under 10% weren't sure what their end game is. And that's a concern, because if you don't know where you're heading, as I said earlier on, any road can get you there, but any road can get you lost as well. So property investment should be for a reason, and you should understand how you're going to do it. Now, things may change. The rules may change. The tax system may change. Maybe negative gearing will be allowed, won't be allowed. Superannuation may be available for us in the future or not. Who knows? But you've got to at least have a concept of what the end game is now. And in my mind, the end game is to own a significant asset base. And then depending on what happens with the various rules, you're going to have choices. If you don't have a lot of assets, you won't have choices.
Correct. They say if you don't have a plan, you become part of somebody else's. And that's the last thing you want to happen in your investment journey.
Makes sense.
The next question, Michael, are you planning to buy a new home in 2019?
Okay. Well, 19% of respondents said they were planning to buy a new home. And that's good news, because while investors are out of the market at the moment, home buyers are still there and they're able to get finance a little bit easier too. But interestingly, this 19% of people who are saying yes is down from last year, when 23% of people were planning to move home. But having said that, it's still higher than the number of people planning to buy a home 24 months ago, 14%. So people are still moving on with their lives. They're getting married, they're getting divorced, they're having babies, and probably not in that order, Ahmed. But home buyers are still out there. And this is what's going to keep driving the property market. That's one of the reasons we're not going to have a property crash, Ahmed.
I think it's fair to say, Michael, that a lot of what we're seeing in terms of market sentiment has been triggered by finance. And so the next question is very relevant, I feel. Have the recent changes in lending policies to investors impacted your ability to purchase another investment property?
Well, almost half of the respondents are finding the recent tighter lending criteria impacting their ability to purchase another property. Interestingly, though, it's only slightly higher this year, 48%, to last year at 46%. So I would have expected a bigger percentage of people to feel the noose tightening around their neck with finance. But having said that, 17, 18% were unsure. And I guess that's because they probably hadn't gone back to their banks to see what's going on. They may well get a bit of a surprise if they do go visit their bank or their broker.
Yep. Now, we have had a bit of a crisis of confidence in 2018. So this next question is pertinent. What will be your biggest stumbling block to purchasing your next property?
Well, while the stricter lending serviceability criteria is a stumbling block for the next purchase of 30% of respondents, interestingly, it's down a little from last year, where it was 35%. So serviceability is an issue, but maybe not as big as we thought. Again, a bit of a surprise. On the other hand, uncertainty about the economy or the future of property is a much greater concern this year. About a quarter of people were concerned this year, many more than last year. And with all the media continuously delivering challenging messages, that's not a surprising result.
No, that doesn't surprise me either. With all the changes that we're experiencing, specifically in finance, this is a question we get asked quite often. Do you think now is a good time to fix interest rates?
Well, around 40% of respondents felt it was a good time to lock in interest rates, suggesting they think the next move from the Reserve Bank is going to be upwards. However, concern for rising interest rates this year is a bit less than 12 months ago, when 46% of people thought it was a good time to lock in rates. So I guess today there's less concern of rising rates because the housing market has slowed down and the Reserve Bank's not going to be in a hurry to slow it down even further by rising rates.
I think the next question is probably going to be a question that everyone is asking at barbecues over Christmas. What do you think will happen to overall property prices in 2019?
Well, investors are less confident in short-term capital growth than they were 12 months ago, and I think that's a realistic expectation. 84% of respondents see property values falling or remaining flat. So 64% thought property values would fall, 20% thought property values would remain flat. Last year, in fact, 64% thought property values would remain flat and others thought they'd be increasing. Very few think property values are going to increase in the next little while. But about 12% thought property values would decline more than 10% in 2019. In other words, over 12% of people were quite concerned about another or a continuing significant drop in property values. I don't think that's going to occur. But again, if that's the way they feel, it means they're probably going to sit out of the property market. And because the majority of people feel it's not going to be as bad as that, hopefully they're going to hop in and take advantage.
Now, valuing good advice and being property strategists, I know that you and I were pretty keen on seeing the response to the next one. Whose advice do you seek or plan to seek for property investment advice?
Well, while 24% of respondents plan to seek advice from a property strategist or an advisor, I still find it surprising that 30% are going to seek no advice on their next property purchase. And interestingly, this is up from a quarter, from 25% last year. Now, we've already said a few times that this is a sophisticated audience who responded, so maybe they do have better knowledge than the average to buy properties. But in my mind, despite the significant amount of research material you can get on the internet, all the information you can get in reports, there's one thing you can't get over the internet, and that's the perspective that only comes after years of on-the-ground experience. So my recommendation, and yes, some people would say it is self-serving because that's the industry you're in, but my recommendation is to seek advice because I do. So 30% of people said they wouldn't seek any advice. 5% said they'd seek it from friends and family. Now, that's interesting. Remember, Ahmed, we've got 25 million property experts in Australia, and they all have an opinion. So be careful whose opinion you get and make sure they're not have a vested interest. So those group of people who thought they'd speak to the local estate agent or their property manager or their accountant, they should just be careful that they haven't got a vested interest and get a commission on the side.
Correct. And I think I might quote you here, Michael. If you're the smartest person in the room, you're in the wrong room.
Thank you.
The next question's a simple one, but interesting results. Your gender.
Well, I'm always surprised that despite our readership being relatively evenly split amongst males and females, significantly more males complete surveys. So 74% of the survey was completed by males and 26% by females. I don't know. What do you read into that, Ahmed?
I know that we're not that proactive, so we must have been told to get that survey done, I'd say.
And we behaved ourselves, so that's good. Now, again, we asked another personal question, and that had to do with people's age. And it surprised me that around half the respondents of this survey were over 50. Now, clearly there's no right or wrong answer to this, but it showed us that we were dealing with people who've been in the property market a while. So hopefully some of the messages and lessons we get from unpacking this report have got some credence and some credibility behind them.
And the final question, Michael, what is your combined annual household income?
So while this wasn't a required answered question, the vast majority of people did. And there was quite a spread from some people not earning much income at all to actually a large percentage of people, 26%, earning more than $200,000 a year. So we heard from beginning investors and experienced investors, and with some of the other questions, this one showed us we got answers from people who are quite well off financially and others who are more along the median values of income. So we received a lot of responses, and this is going to help us as we plan what we're going to do in 2019 with topics for our podcast, topics for my property update blog. But it also gives me confidence, Ahmed, that while the media is telling us that 2019 is going to be a difficult year, and the average person is going to believe them, the sophisticated investors are set, are ready, and they're looking to see if they can take advantage of the market and buy when properties are on sale.
I was going to touch on the same point. It's really refreshing to see that the experienced and sophisticated investors are approaching this with the right level of perspective. It is a long-term view after all.
So there we go. The result of the 2019 Property Investor Sentiment Survey. Thank you very much for your time, Ahmed.
Thank you, Michael. That was fun.
Well, we're almost at the end of the show, but as I usually do at this stage of the show, I'd like to read out a couple of reviews I received and say thank you to everyone who's left a review. And for those that I read out, I'm going to gift you one of my books. So if I read out your review, email me at michael@metropole.com.au and tell me which book you'd like. Now, there was a great review left from XER1991 who said, exceptional content. I highly recommend it for anyone who's interested in property investing. Look forward to the next one. Well, you will be receiving one every week right over the Christmas break. We're not going to stop the regular production. Well, that's not totally true. I'm pre-recording them because I'm having a long break. And there was another review by Jose21 saying, Michael's so generous with his knowledge. I can't believe this is a free resource. I've learned so much about property and wealth creation from this podcast along with his books. This sort of advice is worth hundreds of thousands if you actually listen and take action. This is also some great advice on the mindset. A+ for the best podcast out there. I'm on my second lap. Well, thank you so much, Jose, and I really appreciate that. And if you are getting some benefit from it, do me a favour, leave me a review. That makes me happy. And it's also going to let other people know about it. So why not leave a review, but also pass on the message to somebody so they can learn as well, because my intention is to help as many people as possible avoid the traps that are going to occur in property over the next year or two. Apart from the regular weekly podcast, you can also get my thoughts at propertyupdate.com.au. If you don't already subscribe to my daily blog, because in there you're going to get not only my thoughts, but that from a whole heap of leading Australian property success, tax, money and finance experts. And I look forward to being with you again next week.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from today's show, we'd really appreciate it if you would leave a review, and we'll read it out on a future show, and Michael will gift you one of his books as a way of saying thank you. Just go to michaelyardneypodcast.com/review and let us know what you think. If you don't already subscribe, head over to iTunes or your favourite Android app. You'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success, and money in around 30 minutes.